Are wars good or bad for your stock investment returns? That is what I want to talk to you about in this podcast. And pay very close attention because this could mean a lot of money lost or gained for you over the next 10 to 15 years. Historically, when World War I and World War II happened, what do you think happened to the stock markets? When Kargil war happened in India, or most recently when Russia annexed Crimea in 2014, what do you think happened in the stock markets? If you are an investor investing your hard earned money, you want to make maximum money out of it. We all want to become extremely wealthy and become financially independent. That is one of the cornerstones of DASAR, that every person should become financially independent. If you are interested in knowing what financial independence is, go see this video where I have talked about how you can become financially independent. Now, coming back to the topic of wars and their connection to stock market returns. In February, there was a lot of speculation around Russia invading or attacking Ukraine. That caused a lot of uncertainty. And the worst thing, the most hated thing by stock markets is uncertainty. We don't know what is going to happen. In this case, suppose the worst fears or the uncertainty due to Russia going to war with Ukraine was a nuclear war. And that means end of the world. And so if in such a scenario where a lot of fears of people are played at, that's where a lot of uncertainty causes a lot of volatility in the stock markets. What does volatility mean? It means the stock prices of some of the best performing stocks fall down drastically and then shoot up drastically. Oil, wheat, even cryptocurrencies, which a lot of the crypto investors have been promoting in a way that cryptos are an antidote to inflation, have actually shown very high volatility. So that is not true, right? Cryptos are not an antidote to inflation. So coming back to the data of what wars have had impacted, how the wars have impacted on stock markets. You will be surprised to know that the 2 to 3 weeks before the actual war happens, that's where most of the stock markets have fell on an average of 5 to 6% historically. But according to NDR data of 50 crisis events that have happened since 20th century, over 18 weeks after the crisis, the stock markets have actually gone ahead with about 8% to 9% return. Now take a moment to think about what that means for you as a retail or as an individual investor. I'll give you a few other data points. World War I and World War II combined were 9 years long. And during those 9 years, during the wars, stock markets actually gave 100% plus returns. When Russia attacked Georgia in 2008, just before it attacked, the markets fell by 2.2%. But after Russia had attacked Georgia, within 18 weeks, the stock markets increased by 34.2%. Think about it for a moment, what this means for you as an investor. What should you do for your investment plan? Most wars leading up to the war has caused a lot of uncertainty and the markets have corrected or dipped. But it has been shown consistently that 18 weeks after the war has started, the markets have actually given better returns. I find that completely fascinating. I am very curious. I want to analyze this data, I want to understand it, and I want to maximize it for my own benefit. So now this is the most important part. If you have not heard anything about the podcast, this is something that you should pay attention to. Whether there is a war or whether there is no war, follow your investment plan. If you don't have an investment plan, please spend the next few weeks creating an investment plan because that is how you will build wealth over the next decade to 2 decades. If you are already on an investment plan and you're seeing that Russia is attacked Ukraine and there is a war going on for the past few weeks, if you have liquidity, maybe it is time for you to invest and double down so that you can take the benefit of the dip that has happened in the market. Based on this data, now we all know that historical returns or historical data does not prove or assure or give you any guarantee that you're going to make money in the future. But there is some reasoning behind it, and it is for us to understand why that speculation is. Is there really going to be a nuclear war? Is there really going to be end of the world? Most likely not. So if that is the case, you as an investor, as an individual, are continue going to live, to consume things, to make things, to create things. And the world is going to go on. And so as an investor, you have to think long term. You can ignore the wars if you'd like from an investment standpoint. If you are really more interested about stock market investing, how do you analyze stocks, what are small cap and mid cap stocks and how to invest in them, we've got a plethora of courses and we've got a lot of videos along with some really good fund managers and investors around the world. Take a look at these videos and then I'll see you soon.